On the last trading day, we found an unusual trade worth $21.8 million on Microsoft stock options. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is now trading Microsoft. Are they bullish and buying or bearish and selling? So that we can also make the same financial decisions to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, September 13 at 12:01 at the 36-second mark, we have multiple trades here for the same options. The March 21st, 2025 at the 460 strike calls. We can see here the number of quantities, 5,000 and 3,992. But if we look even more, you can see there's actually more of these same trades over here at the same time here. Another 1,000 over here. This one's just a few seconds earlier at the 29-second mark, but it's still at 12:01. And you can see this was 900 contracts. And so if we add up the total number of contracts here, and then we multiply by the price, we can estimate the total trade that they paid for this. You can see here, 2010 for each of these call options. And 2010, we have to multiply by 100 since each option represents 100 shares of stock. So it's actually $2,010, okay? Because 2010 times 100 is $2,010 per call option. Now, how many contracts were there? Well, let's add it all up. 5,000 plus 3,992 plus 1,000 and plus another 900. So we have a total of 10,892 contracts. And so we multiply by the price that they paid, 2010, and we get $21.8 million. So quite a significant amount of money to be trading Microsoft. But are they bullish or are they bearish? That is the next question we need to figure out. And are they opening these trades or are they closing these trades? Because if they're closing these trades, then this information is not as significant anymore, as opposed to opening a new trade. And so let's take a deeper look at the option chain to find out more about this trade. We can see here on the option chain for these March 21st, 2025 options that expires in about 188 days away. You can see here at the 460 strike calls, we have an open interest of 14,597. So that is greater than the 10,000 that we had just added up, which means this could have been a closing trade. And so because of this, this is a higher risk trade in comparison to the trades that we share on our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
Because not all of these unusual trades will be profitable. Even this one might be a loss because it's higher risk. But as long as we diversify with higher quality stock picks based on this type of data analysis, we can become more profitable in the long term. So if you want more stocks wealthy investors are trading for your portfolio diversification, then go to our website. We'll put a link at the top here where you can gain access to better trade ideas with stronger data analysis than this Microsoft trade here. Now, even though it is higher risk, we still traded this. And that is why you can see we have a position here. POS stands for position. Green means buying. Because based on our analysis, they were buying these call options to open for 2010 as we had just calculated. And so when we analyze this trade, you can see here that on the profit loss graph, where the x-axis represents the share price of Microsoft and the y-axis represents the profit, note the zero line. And so anything below that zero line is a loss. So we have a trade where you can see that as the share price goes down, it becomes more negative, more loss. As it goes up, it becomes more positive, more profits. And we can confirm that this wealthy investor is trading Microsoft long bullish from the Greeks. You can see here we have a positive delta trade. If it was a short bearish trade, it would have been a negative delta. But keep in mind, the risk on this trade, you can see here, the theta, which is time decay, is a -9. So these options will decay in value through time. And that is why you can see actually that this break even, where this meets with the zero line here, actually shifts upward over here. That's the blue line, because the blue line represents the profit loss of these options at expiration in March. And so you can see that as time goes on, these options have to be higher all the way to $480 a share by the expiration of March in order for them to be profitable. Okay, so keep that in mind. And you can see the profit loss over here in this square here, how it is very different. You can see that if Microsoft does not move, look on the blue, it is a complete 100% loss of the $2,010. Okay, so keep in mind that this risk here, it has to break above 480 at expiration for these to start to become profitable. But if it starts to go up immediately, you can see the purple is already positive if it starts to go up. So these options are fighting against time. If it can rise quickly enough, it will have the leverage to become very profitable immediately. Okay, and so if you are trading this, keep in mind the very high risk on the time decay. If you want access to lower risk, higher chance of profit trades, then make sure to go to our website. We'll put a link to our website up here, and let us know in the comments below. What do you think will happen to Microsoft? Will it continue to go up and make new highs and maybe hit 480 by March 2025 when these options expire? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful weekend.